Cool. All right. Welcome back, everyone. Today's podcast is going to be timely because we're going to be talking about SPACs. Past 2 days, we've seen SPACmageddon. A little bit of a reprieve today. I am obviously, as people who read my newsletter know, a big believer that SPACs are back for a lot of reasons. See what happened yesterday is a normal move in an overbought marketplace, but we'll talk about that. Overall market environment, SPY cues, all-time highs, in the face of tariffs, war in the Middle East, Fed not cutting rates, inflation, all that stuff. Market doesn't care. Path of least resistance is probably up. You might want to cut some risk here, especially if you're sitting on massive profits. I know Jeremy's been taking some profits today. Good for you. But that's about it. I don't want to spend too much time on the market. I want to get into SPACs. Jeremy, any thoughts on your end?
Yeah, just the same. I mean, nervously, the market's kind of creeping up. Not everybody's piled into this yet because it's not quite going to up and rally just yet, it seems. Everybody's just sort of waiting for the leaders to take shape. And once they do, they usually will chase it. But for now, it's a good idea to be prudent, take some profit off, make sure you're locking stuff in. And above all, if you're still a little nervous and you still have a position on, hedge it. Make sure you're covered.
Cool. All right, Pat, you want to introduce our guest?
Yep. Hey, this is Julian Klymochko. He is from Accelerate. He talks quite a bit about SPACs and other cool stuff, by the way. He's all over Twitter and LinkedIn. He actually said something really funny the other day about, Pavel Durov and his, 100 children. He's leaving like all his billions to. I thought that was classic. I laughed on that one. But anyway, here he is, Julian Klymochko, talking about SPACs. How you doing, man?
Doing great. Thanks for having me on the show. Excited to chat today with all you guys.
Yeah, no, thanks for coming on. So we run a SPAC ETF in the US, SPCX. We started it, what was it, the end of 2020 or I forget when SPACs were hot, either end of 2020 or end of 2021. By February 15th of the next year, we're up like 24%, 2 million in AUM. Eric Balchunas, the ETF analyst at Bloomberg, sent me a DM. He's like, dude, you're going to $1 billion. And that was the top of the market. and for the past 3-4 years, I mean, we keep the fun going just because I knew SPACs were going to come back at some point. And, here we are. I'm actually talking about SPACs again. Not the same crazy market, I don't think, that we saw back in the day. Now you run it's not a SPAC fund, it's an ARB fund?
Yeah, so I'm PM of the Accelerate Arbitrage Fund, which is a TSX listed alternative ETF. And our focus is merger arbitrage and SPAC arbitrage. And so we're very involved in the SPAC market. I've been tracking the SPAC market since 2013 when it first came up on my radar. And we are very active both in the primary, i.e. IPO segment of the SPAC market and the secondary trading as well. So our strategy is somewhat differentiated, and we approach it from an arbitrage risk perspective, where we always buy at or below NAV, and primarily in the initial public offering where we get in at 10, and we get that upside optionality while having our downside fully covered. And so we think from a risk reward perspective, it's one of the best strategies out there if you like consistent returns and you don't want to lose money.
Awesome. Did you guys participate in the CAEP this morning?
Not as much as we'd like to, but obviously way oversubscribed. We did get a small piece. Unfortunately, not as much as we wanted, but it's, we have participated in all of Cantor's SPACs, and each subsequent one, we're getting fewer and fewer shares in our allocations, unfortunately. But after the success of CEP and 21 Capital, people are all over their deals, and 240 million bucks. There's not a lot of shares or units to go around. I guess shares in this case.
We've got a great relationship with Cantor. I'll try to put in a good word.
I'd appreciate that.
I had Howard gave me his Knicks Celtics tickets for Game 3.
Oh, that's where
Oh,
you got
wow.
those.
That's
Oh.
where I got those. Yeah,
Nice.
yeah.
My
say, those
kid
are
still
great
talks
seats.
about that, by the way. He think like he calls you Matt. He goes, Matt going to be at the game next time? You know, so he's into it.
Matt's not getting Howard seats every game. I think that's a once in a lifetime type of.
Right, got it. Oh, that was cool though. All right.
But the cool thing about that is, especially after SPACmageddon, looks like it's going to open up, a decent amount above the IPO price. So
Yeah, last time we checked around 1060.
yeah, so I mean, awesome to see. Back in the day, these things were opening up like at ridiculous numbers. I'll take 1060, all day, every day. I don't need it. I mean, it'd be great for it to open up at 12, but I don't want what happened the last time to happen this time. So if things are a little bit more muted.
So you guys don't kick it at 1060, right? You buy it and you hang in there.
I mean, we got a good allocation, so we may
Peel a little out.
peel some of it off. Just because, I mean, I saw someone tweeted, how many SPACs does Cantor need? It's kind of like, yeah, I mean, probably
Right.
not.
Matt, if you look into like the chat here, I put in Julian's one of his websites, AlphaRank. I don't know if that counts, Julian, but I hope that's you. He has like some comments about like who are the big issuers are of SPACs, and the Cantor was like 3 or 4 for the year, right? Globally, something, right?
Yeah, Cantor's big. Goldman's back in. But Julian, what are your thoughts on the past couple of days? I know you've been tweeting about MBAV, CCM. I got the CCM chart up here. Now we're looking down 4 days in a row. What are your thoughts on the past couple of days?
Yeah, and I think, number one, that's a really good question because there's been interesting market dynamics manifesting themselves. And it's, if we go back a little bit more, primarily like over the past 3 years, it was largely a story of baby out with the bathwater where no deals were good deals, basically zero interest in any sort of SPAC mergers, even when, Sam Altman, who's kind of like one of the most popular person in markets with OpenAI, say, 12 to 18 months ago, he did a SPAC and no one even really cared about it. They had the Oklo deal, and it really struggled just to trade above trust value. And could you imagine, like, in a normal environment, one of the most popular guys in the capital markets having this kind of super sexy nuclear deal and it not even breaking above trust value? And that was the SPAC market for basically 3 years outside of the DWAC DJT transaction, which was the one kind of deal that worked, where it traded above trust value. And that really started to change. And I think the main catalyst was CEP 21 Capital, which really reinvigorated the market and brought a large contingent of investors back into it, where they're like, hey, there's this cool asset class where there's these new opportunities, right? And you saw it sort of coincide with the reopening of the IPO market. You had some tremendous IPO successes, CoreWeave. You had Circle Financial, which was up like in insane amount, as much as 600%, which, by the way, tried to go public via SPAC at a $4 billion valuation in 2021 and was blocked by the SEC and is trading at like a $30 billion valuation. So, but I digress. Now, that said, after CEP, people started paying attention to SPAC mergers again. And with that, a select number of deals, still a small fraction, started trading above trust value, which to me indicates positive sentiment, where they're ascribing some value to the underlying business. And it's not just arbitrageurs buying at a discount to redeem. And so that's a really important dynamic to track. And you started to see, for example, the grab-a-gun deal in which Donald Trump Jr. is involved. That started trading up, CLBR. and a small handful of others that started trading above trust value. And then you had CEP, which was a huge outlier, traded from like $10 to north of 50 at its peak. And coincidentally, you have this market dynamic spurred on by MSTR, the popularity of crypto treasury companies, Bitcoin treasury companies, which, company says they're buying Bitcoin, they're now a treasury company, and stock doubles or triples. And you've had various derivatives of that, Solana, Ethereum, diversified crypto exposure. And those two themes, SPACs and crypto treasury companies, started merging. You had the CEP deal and you had the Silverbox transaction. They have an LOI with a crypto firm, which is launching a crypto treasury company in South Korea. And then you had the CCCM ProCap transaction, where that thing, what they did, they released, trial balloon rumor through Bloomberg, which caused their SPAC to rally hard from the 10s up into like the 15 and change range. So that implies a lot of positive sentiment and high expectations. And when that deal was struck, investors were, I'd say, greatly disappointed. It seems like it wasn't struck in the best balance that rewarded shareholders, number one. And number two, to me, that started to indicate, is this crypto treasury trade getting long in the tooth? Really, how many of these can the market handle before it's fully saturated? Then yesterday, sort of midday, there's another trial balloon, another Bloomberg rumor on MBAV with another sort of crypto treasury derivative play, and the stock got slammed. So to me, that indicates that, hey, the market doesn't really like these deals anymore. You've had a bad taste in many investors' mouths after the CCCM transaction, which was down more than 20% on the news. And then to me, it was just indicative of that crypto treasury trade within SPACs really running the course, and investors no longer having the appetite for it. And you saw that sort of proliferate across the SPAC segment, where you had other, quote unquote, like in the money transactions, announced mergers trading above trust value, or even pre-deal SPACs trading above trust value, really weak on the news, or that MBAV deal rumor, and traded off pretty significantly. And it's a dynamic it's bouncing back a bit today, but to me, that's indicative that, hey, this crypto treasury trade might be over.
Yeah, and I see what you're saying. I don't think so yet. I think obviously the crypto treasury trade went parabolic. A company would announce, hey, we're getting into crypto treasury, and they double. That actually, interestingly, stopped, I think, a week or so ago. So we have a 2x on DJT, and I remember DJT came out with news. I don't remember when it was. I think it was sometime last week. Hey, we're getting into crypto treasury, which I knew they were going to do, which is why we did a 2x on it. And I'm thinking, this is great, and nothing. And
GameStop as well.
And we have a 2x on GameStop. They did the same thing, and nothing. So, I do think that, the days of someone saying, hey, we're doing crypto treasury, and they double, I think that's done. What MicroStrategy shows is, if you can figure out how to execute this, you can still do well. There are probably, too many. We filed for 2x on a bunch of them. Semler's one we filed for a 2x on, that's getting its butt kicked. UPXY is a Solana one. That's just, that thing's just getting savage.
Can I ask Jeremy a question here real quick? So Jeremy, long, red, and skinny, that's bad, right?
Yeah, that's It looks like the chart is spelling out buy the rumor, sell the news.
I
And
just want to be clear for the viewers
Yeah.
out there.
Right.
All right.
But now on the SPAC side, there are a whole bunch of other, industries and, operators who have background in other stuff. It's not just Bitcoin Treasury and doesn't need Bitcoin Treasury to keep going. Are there any SPACs? Are there any sectors that you particularly like here?
No, that's a great point, and I 100% agree. I think we'll start to see a lot of different transactions. Like, I just don't want to see like 10 Bitcoin Treasury SPAC plays. Like, what's the point? There are good deals to be done. There's been some success with small modular nuclear reactor transactions. There appears to be a nuclear renaissance, not just within North America, but globally writ large. And I think that's a theme that has a lot of potential. And I think SPACs are appropriate with kind of earlier stage companies. They're more speculative, more difficult to value, and more volatile. But with that, it really fits like hand to glove into the structure. And I think those modular nuclear reactor, that the theme of that entire sector is at the right stage such that they can go public and show some progress. And Oklo is a prime example. So we've seen a couple of those deals announced. I think those could potentially do well. I think it's a good vehicle for biotech. Biotech transactions will continue to be announced. And crypto operating companies. If you look at the success of Circle, amazing IPO.
Yeah.
Just voracious demand. Coinbase continues to do very well. Recently inducted into the S&P 5.
Julian, I have a question for you. So what about size, right? So these Cantor deals are what, 200 million, $500 million deals, whatever. So there's smaller deals too, right? Like you don't have to buy an IP, or, a SPAC IPO from Cantor. You could go to someone else and buy a $50 million deal or 20 million. Are there other smaller places to go?
Yeah, and that's a good point. Like, gone are the days 3 years ago, 4 years ago, and there was like $1 billion SPACs, or Bill Ackman did a $4 billion Pershing Square SPAC. There's really no need because that ends up with unnecessary dilution. So what we're seeing, SPAC 2.0, is basically trust accounts of 50 to 250 million, such that you can do a merger at valuations between, call it, 100 million and 5 billion. So right in the micro cap to small cap range, which is kind of prime hunting for deal targets. Any larger than that, they're just going to do a direct listing because they have more than enough access to capital in the private markets. Like, we're not going to see a Stripe or anything go public via a SPAC because they're probably just fine living in the private markets for as long as they need to, which may be forever. That's to be seen. That said, I think there's more segments and sectors to go public in addition to crypto operating companies. It's kind of funny, like those involved in, adjacent to the government. You've seen people within President Trump's inner circle. You've seen the return of the DWAC DJ team, Sans Orlando, who currently has an SEC lawsuit going on, and you've seen a lot from Cantor, who's obviously involved in the administration, and Donald Trump Jr. I think you'll see more Trump adjacent businesses going public. Man, I wasn't sure if it was you who mentioned taking Trump Mobile public. I think that's a good potential because there is tremendous public market support to fund new ventures. Like, they funded Truth Social. Truth Social is basically a seed stage startup, and the public markets funded that for billions of dollars. Interesting fact is that in Canada, there's basically no venture capital business, and new industries are funded by the TSX Venture, which is retail investors. For example, retail investors in Canada funded the entire build out of basically the global cannabis industry. And they ended up losing like a crap ton of money if they didn't sell at the right time. Some sold at the right time and made a fortune, but there's the ability to fund early stage companies publicly. We haven't really seen much of that in the US public markets. There was an attempt to buy SPACs in 2020, in 2021. Most of them failed, but that's kind of par for the course with early stage financing, and you'll get some big winners from that. So I think it's a good structure for financing new ventures, whether it's media or crypto stuff or nuclear, biotech. There's all these different themes that have a ton of potential utilizing the structure.
So, all right, a lot to unpack there.
Quite a bit.
So, Pat, you had asked the question, about the size of the deal. And I would argue, and I'd love to hear what Julian thinks, that's not what you pay attention to. You pay attention to who the management team is.
Yeah.
Who are the guys doing it? Not even the underwriter as much as, who are the guys doing the deal? One of the big issues that we had when the bubble popped is too many SPACs chasing too few deals. So if there's a good deal out there, who's it going to? Is it going to Pomp, or is it going to, the Churchill Capital guys who did, the Lucid deal, which was, that was the big SPAC deal back in the day. So the thing we're always looking at is, all right, who's the management team? What have they done? What are their connections? Much more than the deal size. I mean, SPCX, from a prospectus standpoint, we're not supposed to go under 100 million anyway.
I see.
We've got a 5% rule. So
Oh, okay.
I can do a deal under 500 million. I can't do a lot of them. But Julian, what are your thoughts there on management teams?
Yeah, you really nailed it on that one, Matt. Like, you want to back the jockey, right? You need someone driving the bus who knows what they're doing to put together a high quality transaction, because otherwise you're just basically in a treasury bill, because if they're not going to announce a good deal, or they're going to end up liquidating without a transaction or turning into one of these zombie SPACs, which have kind of proliferated, where they just keep extending and offering. Each time they extend, they have a vote and they offer redemption, such that after multiple extensions to get past the 2-year time frame, then it's whittled down to like a trust of like $2 to $3 million, and you have no hope of doing a transaction at that point. So you want someone who can, number one, do a high quality transaction that's going to find a market support both in the near term and the long term. In addition, to do it relatively quickly, you don't want to be in this thing for 3 years once it's extended and been redeemed, and now it's super small. So those are some key factors. So definitely one of the primary considerations is betting on the jockey. Who's the team behind this SPAC, and do they have a track record of success in putting good transactions together?
Okay, let me explain why I asked the question though. So I talk to a lot of like private guys. Like we have someone on the show here in a couple of weeks. It's a reusable like rocket company, right? So then I had talked to a guy yesterday. He's doing like a kind of kind of like an advertising roll up. So he's trying to buy a bunch of advertising agencies. So I mean, like, can those guys access the SPAC market? Let's say that's the reason I asked the small question, because they're not $200 million valuations, but a lot of guys ask me about how they can finance their company, and I always say maybe the SPAC market's the place to go. That's the reason I asked.
I'd probably say don't bother if if you can't justify like a 9-figure valuation, then there's other routes to go. There's a smaller blank check market in Canada called the capital pool market. That could be one, finance it through the TSX venture. I've done a blank check company in Canada, and they tend to be quite a bit smaller. The transaction that we did was around $25 million.
Got it.
And also, Pat, remember, on a SPAC deal, typically what you're going to do is once you've got a merger target, you're going to need more money. You're going to raise a pipe. And, when how you can tell the SPAC market is overflowing is when all of a sudden guys like me are getting hit up left and right to participate in pipes, because that's
point.
typically. What's that?
Good point. Yeah,
I have this question here that I brought up, that ChatGPT, brought up. So how do pipe deals influence the attractiveness in SPAC deals?
Well, in my opinion, it adds credibility to the transaction, right?
Yeah.
It's like, a startup announces a Series A, and they have this VC firm, that VC firm, that VC firm. So if you can announce a PIPE, i.e. capital market support, and not only just credibility, which is number one, but valuation support as well. If you're willing, if there are sophisticated investors out there willing to underwrite the valuation at $10 per share, sometimes they do convertibles or preferreds, which are less indicative of this dynamic. But if they're willing to take common stock, a unit at $10 and do it for size, then that really helps validate the valuation that this transaction has taken place.
Okay.
Yeah, 'cause remember the pipe, people participating in the pipe are Wallcross, so they know the deal.
Right.
And they're then making a decision knowing the deal. Yeah, I want to do this, or I don't want to do it. Versus, us, we're buying the management team, hoping the management team is going to make a good deal, but we don't know what the deal is until it's public.
Okay, I got you. Okay, that makes sense. I have another question, if you don't mind, or you guys have something to ask, Matt. You always have something to say. Okay, so Matt talked a little bit about last week, or last time we had a conversation about SPACs a couple weeks ago, about pre-merger and post-merger SPACs. I mean, what are your thoughts on the differences or the commonalities in that, Julian?
It's a different dynamic because pre-merger SPACs, in my opinion, my thesis is that there's undervalued and mispriced upside optionality, particularly if you could buy at or below trust value, right? But on a post-deal SPAC that has not closed, the cat's sort of out of the bag. You don't have that upside optionality, or not as much. You basically have exposure to the underlying business, and that sector could rally and take the SPAC shares with it. However, if it doesn't rally significantly on deal announcement, then to me that a lot of the upside optionality kind of goes away. So I like to lean into pre-deal SPACs because once this upside optionality returns, and you saw it through CEP, you have a ton of torque there. And no downside either, which I really like. So I like to run the strategy where I don't lose money on any SPAC because I'm always buying, at like $10.
Yeah, and here's the big difference. So we talked about the nuclear theme. So let's say I'm a big believer in nuclear, which I am. I don't think you get AI without nuclear. So you've got GSR acquisition, GSRT. They made a nuclear deal. They're trading at 1088. I don't know exactly how much is in trust. Let's say it's $10. So my downside here is 88 cents. My upside is virtually unlimited. Versus, and Jeremy and I know this stock because we traded all the time. Oklo, now Oklo, if you had bought in at 10, you're sitting at 57. But your downside is zero. I mean, this could go to zero. You've got no floor under this stock. That's the difference. And when you had back in the day too many funds chasing too few deals, you had a lot of crap deals.
Yep.
And a lot of people probably won't remember this. We had an inverse de-SPAC ETF that in 2022 was the top performing non-levered ETF in the country. We were shorting all of these de-SPACs, and most of our portfolio, by the time we went and ended up shutting this down, which was a shame, that's a long story, but most of the names in the portfolio were trading under 2. Now, a lot of those names have come back, and a lot of those names are now the hot names that retail is in.
Yes.
Yeah, but if you bought those SPACs at 10 and held through the deal on a lot of these names, you got your butt kicked. That's the big difference. They are totally different animals. So me buying Oklo is an entirely different trade than me buying GSRT.
Got it. Okay. So, yeah. So, Julian, you said that there have been over 10 billion raised across 58 new SPACs year to date. Makes sense. So, where do you think this goes in 2 to 3 years? Maybe the next 6 months, et cetera, et cetera.
Wow, that's a tough question to answer because this market has been so cyclical. I've been in it for a long time, and pre-2020 was really just a backwater and wouldn't make page 20, let alone page 1. And the vast majority of people had never heard of the asset class. And then I think the deal that really kind of set that initial bull run off was H.E.A.T did the space deal. And to me, that appeared like a real Hail Mary. So if I recall correctly, this SPAC was kind of at the end of its life and had to do a deal before liquidating and announced this deal with Richard Branson. And the shares just took off. And I think it was really unexpected. And it unearthed or unlocked this undiscovered retail desire for early stage plays in the public capital markets.
Right.
And that's this massive boom in 2020, which went way too far. There was a point in time where there were, I believe we peaked at 721 SPACs in the market. Obviously way too many, completely unsustainable. And every single one was at a premium to its trust value, which was just an insane dynamic. And you're having like months in which they're like well north of $10 billion being raised into the SPAC market and way too much hot money chasing it. And so you had this massive boom, which is preceded by basically a 3 years long bust. And that really displayed the cyclicality of it. Well, this clearly we're on an upcycle now. Will this cycle be more constrained and less extreme? I hope so. I hope we get to the point where it's sustainable. And I think sustainable is between 100 to 200 SPACs where we are right now. It seems to be a pretty good spot. And, some deals trading above and some deals not trading above, where the market's discerning quality from junk, basically. And so where that goes, it really depends on the sponsors and the underwriters and ultimately the investors that are supporting this market be more disciplined this time and not just go insane like in 2020 where the market just got crazy overheated. And I was warning people at that time, you're paying $20 for $10 in trust because Bill Ackman's running it. I love Bill Ackman, great investor, but you shouldn't pay double cash value for anything, right? And people ended up getting hurt on those, just paying way too high prices. Hopefully they learn their lessons, but as we know, in capital markets, new people enter the market every day, and I feel like there's a new contingent of investors. Back then we didn't have the meme stocks yet, and we didn't even have meme coins, which is a whole another level of speculation. So I feel like there's this new contingent of investors who perhaps weren't around for 2020 that could run this thing into the crazy levels, but it's to be seen. I'm hoping that it doesn't. I'm hoping for a more sustainable market.
I would agree. We could certainly get crazy again. I hope people learn their lesson. When we launched SPCX, we kind of figured, all right, 6 to 12% a year, low volatility, low correlation. And we're sitting there, February 15th, and it must have been 2021, and we're up 25% year to date. Holy crap.
Yeah.
On the one hand, it's like, this is awesome. But then on the other hand, you're like, this is just not it's not sustainable. I mean, every
Yeah.
morning I wake up and I'm like, all right, what in my portfolio is going to be up 30% pre-market?
Yeah, yeah, it was fun. However, it set unrealistic expectations, and you knew that there was going to be a hangover to the party. And I like to see kind of more sustainable, steady returns as opposed to like, oh, crazy, and then a shit market for 3 years or 2 or 3 years, right?
Exactly. I mean, we run a version of the permanent portfolio that I created, and pre-merger SPACs are a big piece because I mean I'm hoping for 6 to 12% uncorrelated, not up 50% and then dead for 5 years. That's that's definitely not not what I'm looking for. You mentioned something interesting in passing I want to get back to. What do you think of the potential of Chamath coming back into SPACs?
I think I think it'll happen. Highly likely. I'm checking every day for his S1. It's just a matter of what's going to be called and what the ticker symbol syntax is going to be, because I was commenting on one of his posts that his tickers got hijacked. He was going with the IPO, then a letter, and now Dune 2 acquisition took IPOD. So it's like Chamath is going to have to reinvent himself, which is probably for the best.
I think he's going to want to anyway.
Yeah.
So,
yeah,
can I stop you guys? Chamath. His last name starts with a P. I don't want to butcher it. He's
Ali
with.
Papatia.
Okay,
Yeah.
you got it. He works for Social Fund. He's a Canadian guy too, right? So you threw that in there. I caught that. So tell me, why is he so controversial or good or bad? What's the deal with this dude?
So I previously mentioned he had his initial SPAC, which was up against the wall and about to liquidate, and he announced the transaction with Richard Branson and the space transaction, SPCE, rockets to space and stuff like that. And that really, I think that kicked off the first SPAC bull market, where it unearthed this tremendous amount of demand for early stage plays. And from that, he just kept reloading and had this theme of his IPO series of SPACs, where his thing was, I'm going to fix the IPO market, and I'm going to do that by SPACs. Going to bring all these great companies public and really correct an error in the IPO market. And he's a guy that came up largely through Facebook. Good timing, probably smart guy as well, but well connected in Silicon Valley. And he started putting together a whole bunch of deals. He had a ton of SPACs.
Got it.
The social capital and social capital at Sophia. He probably had at least 8. And some deals did poorly. Some kind of went to zero. He did have the odd winner. He did SoFi, which is trading well above $10. I believe he did MP Materials as well, a rare earths play, which was actually formerly bankrupt, but he bought it, and that's done very well also. So I think unfairly people gravitate towards his losses while ignoring his wins. But that's sort of like the venture business. You have a small handful of winners and a lot of losers. And that's what he had. Granted, he may have, or people accuse him of, I don't necessarily hold this view, of cashing out while retail investors sort of lose. To me, it's, everyone should do their due diligence, and investing in the markets a risk. As long as everything's fully disclosed, I don't think you can blame anyone for taking profits or getting liquidity. You can judge him by the quality of his transactions, but you got to look at the good and the bad. And he was branded as the SPAC king. He was a very good stock promoter. He'd go on CNBC and promote these deals, have them trading very well. And unfortunately, investors were kind of like tripping all over themselves to get into his deals. They bid them up to unsustainable prices, and a lot of people ended up losing money on the ones that didn't work. He ended up liquidating a bunch of SPACs after the market cycle turned against everyone, and he lost a lot of his goodwill. So he ran a poll on X asking if he should relaunch a SPAC, and it was overwhelmingly no. And then he's like, "I'll do it anyway."
I voted yes.
So
I
can you
no
buy
idea.
calls, Matt? Can you buy calls and puts on all these?
Some. It usually takes a while, so people are hemming and hawing out there about GSRT that they don't have options. CEP has options. Don Jr.'s SPAC CLBR has options. I love it when they have options because I'd rather you can sometimes sell calls right around 10 for decent premium. I mean, there are things you can do. What I used to love doing, so SPCX, our ETF, has options. Back in the day, they were actively traded.
Right.
Those were great to buy. I mean, now I'm just hoping people come back in because I want to be, I own the shares. I'd much rather be trading the options on that. So some are going to have options, some aren't.
Yeah, in a good market, these can really run.
And then there's the traders. So I know for me, I love playing on house money. So like if I'm in anything that goes up 100%, I automatically have a limit order to sell half that position at 100%. And it makes my cost basis essentially zero on a remaining position. I like to think that had a lot to do with how a lot of these SPACs got chased by FOMO, a bunch of retail investors just literally, like you said, tripping over themselves trying to get into this. And some slightly over speculated values in it, people just weren't really paying attention and doing their own due diligence, kind of shot themselves in the foot on a lot of that and ended up costing people a lot of money or a lot of bag holders to happen. So in a sense, does that affect enough of the fund itself to where it makes it harder to maintain that floor at $10?
100%. Yeah. If all the SPACs are well into the money, then if you're kind of like an arbitrage or buying around $10, then it's impossible. Like it's just the market's not there. I remember kind of around the peak, I had this institutional investor from the Middle East say, "Hey, we run a portfolio of SPACs at NAV." I'm like, "Well, that's not possible. There's literally not a single one that's trading not above its net asset value. Like that's just not where we are." And then 6 months later, I call them up. Okay, 100% or below NAV. I can run this strategy for you, and no interest. It's like, you can't have it both ways.
Yeah, you kind of have to adapt to the marketplace. So back when it was hot, it was not SPAC arbitrage, buying for $9.90 what was worth 10. It was get IPO allocations,
a knife bite,
and that popped to 12.
Right.
And just buy up stuff from operators because those deals were going to pop. Then the market died. Then it was all right. I'm going to buy $10 of cash for $9.90 wherever I can find it, and sit in that and redeem, which was a fairly simple strategy to run. And now it's more of a get into themes that you like with a known and limited downside, and just be careful not to overpay for this stuff. I mean, here's an example. CLBR got up to like what, 18?
Yeah, I was looking at that one.
Yeah, I mean, 1750. If you're buying it up there, you got a problem. Now if you got the IPO at 10, you're a happy guy. But you buy at 17, you got a problem. CEP. So CEP is one we don't own for the fund because at 28, my downside's 10. That's just way too much. I did own it personally. I got out when it cut the 50-day, but now to me that's the game, is find themes and be able to invest in them with limited downside.
I think you answered the question here, Matt. I was going to ask Julian, but I'll ask it again. So what advice would you give to retail investors interested in SPACs today?
Good question.
Question,
Julian,
Mark.
go ahead.
Do your due diligence and know what you own. Don't pay too much, but if you do pay too much, you gotta be ready and willing to wear that risk. And as Matt said, like if you're buying at 15, you gotta recognize there's downside to 10 before the deal closes. Then once it's a D-SPAC, all bets are off. You're wearing that risk all the way down to zero, and you better have conviction in your due diligence. And for pre-deal SPACs, don't pay like a huge premium. I know there's some upside optionality there, which is worth something, but it's not worth paying, $13, $14, $15 for. I think that's just pretty crazy. And, pay attention to dynamics here. I think with respect to and you saw this with CLBR after they announced the deal, that deal announcement was kind of underwhelming, and it traded down and briefly traded to a point where you could buy background net asset value and still have like really good upside optionality, which ended up working out for anyone who did that. I'm seeing a similar situation with CCCM, the ProCap Columbus Circle transaction, where it's traded down to a level 10 and change where you're not wearing a lot of risk. And these deals can take a while to close. So you basically have like a slightly in the money call option for what could be over a year if it takes that long to close. And if you look at, CCCM, for example, no position in it, but I'm looking at the current net asset value around 1004, but by the end of its term, which is May 2027, at current Treasury rates, it should have about $10.70 in cash. So if I look at that, if it trades even down to 1050, you're not really taking on much risk because that thing's going to accrue interest over time and likely make you whole if this deal, doesn't work out or if it never trades up again. But with a transaction like that, you do have some upside optionality there with the crypto markets.
That's like your strategy, Matt, right? This looks like one of
Yeah,
yours.
I mean, so that's huge. I mean, price matters. I love SPACs because of the limited downside, but if you're buying CCM at 17, your downside $7. That doesn't help you a whole heck of a lot. But like Julian said, if you're buying it here, you've got almost no risk and you've still got theoretically unlimited upside. So, price matters. If you're a retail guy, you're not getting the IPOs like Julian and I are. But you can get in on secondary markets. Price is important. Management team is important. And theme is important. Julian kind of glossed over this, but it's, something we're big into. We're launching an ETF around this. And, I'm doing a webinar too about this, is kind of Trump's inner circle. So, a CLBR with Don Jr. involved, Cantor SPACs, Howard Lutnick, a GSRT, which is nuclear. Trump just signed an executive order. RCAT, which is what is it? RTAC?
Renatus Tech.
Yeah, that's what I wanted to do.
That's
the XDWAC guys, those types of things I really like.
Yeah.
So if Chamath comes out, if I hope I got that right, comes out with a deal, are you guys all in on the IPO?
I would be all
100%.
in on that deal because I think he is extremely well connected and wants to redeem himself. So yeah, I'd buy his deal.
Got it.
Yeah,
All right.
I'd buy as well. I'm a supporter. I think he gets a lot of haters because he's been successful and he is kind of prickly if you follow him online. So I think he rubs a lot of people the wrong way and they give him a lot of flack for it. But if you evaluate his kind of potential, and as Matt indicated, well-connected, great deal flow, you want a sponsor that has great deal flow. And even, the top tier sponsors, whether it's Churchill or Gorse Group or even Cantor, they all do good and bad deals. There's basically no one who has a 100% hit rate, particularly if you're doing, 10 SPACs historically, right? So
Right.
you got to accept the fact that some are going to be good and some are going to be not good. But if it's a repeat sponsor with a track record of getting transactions struck, then they're worthwhile backing, in my opinion.
Yeah, I mean, people hate him. He's a billionaire. He's ripped, and his wife is hot. So
Yeah.
Yeah, sounds like you. So
Yeah,
the next question, the last question. So when you look at this chart and something like this, can you even do technicals, quote unquote, on SPACs? I mean, is there like a 5-week chart? Does that even work, or do you do stuff like that?
I would not do technicals on SPACs, not pre-merger SPACs. I mean, a de-SPAC, yeah, I would. But like on something like this, I wouldn't. On something like this, I'm looking at it. I mean, right now it's 1163. That's a $1.63 of risk.
Right.
It's not awesome. It's better than buying some, it's better than buying some stock on the street where my risk is, everything. But, I would have, we were buying this earlier. I don't know that I would add to my position here at 1163. That may be a little rich for my blood.
Right.
I'm going to unveil key technical indicator. I don't think I've ever publicly disclosed, so this is an exclusive.
Do we need to sign an NDA or anything? Or
Well, you've got it here first,
So
folks.
here's a key one to pay attention to. So pre-deal SPACs are largely owned by arbitrageurs, which are looking to exit, above net asset value. Ideally, that's kind of their role. And so what I look for is if you find a SPAC that has announced a transaction but still hasn't traded up, basically the market's saying they need to churn through the shareholders. So if it's a $100 million SPAC with a 10 million of shares, watch the cumulative shares traded since deal announcement, because I feel if they can say in this example, trade through cumulatively 10 million shares, then you sort of have those arbitrageurs off the offer, because some arbs will just throw like 500,000 shares on the offer and the stock can't trade up with that dynamic. However, once you clear out the arbs, that a SPAC has the ability to rise up way above cash value and really exhibit that upside optionality. So I think tactically, that's an indicator that I like to look at that can exhibit or indicate that it's ready to really take off. We saw that with GSRT. We saw that with CLBR. So the key is watching the cumulative shares after deal announcement, clear at the ARBs, and have that sort of ARB-free upside optionality where they can really take off.
right. Yeah, that's how. Yeah. That's how we used to trade IPOs as well, actually. All right. So Julian. So where do we find you, Matt? You want to pull up his Twitter or something, or his X? You're on. How does Matt find you on Twitter here? I follow Julian. Maybe you have him.
Yeah, I'm on X at Julian Klymochko. It's a tough one to spell, but you guys provide the link.
There it is.
Often tweeting about SPACs and other things of that nature, mergers and acquisitions, other sort of general market dynamics, LinkedIn. If you want quick access to any sort of SPAC analytics, we run a free platform, AlphaRank.com. If you want to check, hey, what's a SPAC's NAV, or get insight into a deal or an IPO, we provide all the analytics there. And like I said, it's free, no sign up necessary.
What is that website?
It's in the chat, Matt. If you look in the chat right
Yeah,
there.
it's in the chat. Just click on it.
AlphaRank.
Our chat, the chat for this Zoom, actually.
Yep. I put it in the description as well.
But it's alpharank.com, ALPHA.
Yeah. So we cover SPACs daily and M&A transactions as well.
There's a lot there, actually.
Yeah, I was exploring it a little bit last night. I was like, whoa, hey, this is valuable. I'll add myself. Thank you.
Like that screener's cool. Click on that. Yeah. Stuff like this. Yeah. A lot of info. Where do you get all the data? Do you put that in there yourself every night, or what? You obviously have help.
Yeah, no, we got a team here. We run this as a strategy. We do due diligence on every team, every SPAC. We're doing the sponsor calls. We run a podcast as well, Absolute Return Podcast. We've had sponsors on there. We've had Matt on the show as well. So we're very active in the space. We're very active in the SPAC market. So we've done due diligence on well over 1,000 of these things, and we have a vast database that we make public to anyone who wants to use it.
All right, cool. All right, guys.
Very cool. No, that's good stuff, man. And I love that you mentioned the cumulative stuff. We kind of watch that with futures too. We can use it in a very similar way. Very cool.
Yeah, it's a good technique.
Heck yeah.
All right, great. Thanks,
Thanks, Julian.
Thanks
Perfect
again.
timing. Let's hope
Having me on the
SPACs
show.
are back.
It was a good chat.
And thanks again
All
for
right.
joining us. If you're watching,
So Matt, wait. So who coined SPACmageddon? That wasn't you, was it? 'Cause
No, I just did that just now.
Dude, that was unbelievable. Matt
Need to-
told us SPACmageddon. I got a question for Matt though before we cut off. If I say
Yeah.
Celtics and lottery team in the same sentence, what do you say? What is it? What do you
I say start looking for a new job.
And if you come across any Letnick basketball tickets, feel free to invite.
there you
All
go.
right, Nick.
Yeah.
All right, later,
Next time I
guys.
get
See you
floor
later.
seats, you're in.
All
I
right, see ya.
I wanted to add, you might take SPACmageddon and go add that to the Urban Dictionary. That's a good one.
I like it.
Put that on
I'm
a coffee cup.
All right, good job. See you guys.
All right, thanks
All right.
again. Thanks for joining us. And if you are watching, please like and subscribe. We're pushing for subscribers. Once we get to that point, we're going to be doing a lot more cool stuff with the channel. Thanks again for joining us. We'll see you next time.
All right, later, Cool J.